All right, Keith Fitz joins us this morning. A little bit of green before we open this market. All right, Keith, what's the most important event this week? The Fed decision or big tech earnings? Don't say both. You've got to pick one or the other.
Big tech earnings, no doubt about it. The Fed is out to lunch somewhere, and what matters is how executives see our future. Big tech is perhaps the single most important bellwether opinion of the entire summer.
And of all these big tech earnings, the five big guys, which one is the most important, do you think? Jeff Seeker told us he thought it was Amazon because that was the best indicator of consumer behavior. What say you?
I'm going to disagree with that one, and respectfully so. Jeff is a super smart guy. I'm going to go with Microsoft because that company has got loads of legacy things. It's not about software. It's about bringing people together. How that company is moving big data and where the companies are going is going to be reflected in Microsoft's numbers. The company's growing earnings and revenue by 12% a year. I think they're going to do $300 billion out in here in 2025. So any short-term dislocation to me is going to be an opportunity to pounce. Normally I'd go ahead of that, but I'm going to sit back and let the markets hand it to me.
Do you see any big disappointments coming from any of the big five?
You know, it depends on how you define that term, honestly, Stuart, because, you know, the media is going to do everything it can to sensationalize the news. Really, what I want to focus on is the executives, because 90% of the very senior level C-suite execs are super cool thinkers, super forward thinkers. And if they're roiled and upset, that's a chance to get upset. But most of them are not going to be. So that's what I'm going to watch for. Do they reflect stress or are they upset in any way, shape, or form?
All right. Now let me ask you about the the Fed. There are a lot of people predicting that they're going to raise rates by 75 basis points. If they did that, what do you think would be the market's reaction?
Well, I think the market's got an 80% probability of 75 basis points at this point. However, Stuart, I think that the Fed is just foolish enough that it might actually throw 100 on the table. And, you know, don't ask me why. It's just gut intuition. I hope to heck I'm wrong because that would roil markets. But the fact of the matter is they caused this crisis. They've already caused the next three crises. So the markets have adapted to that.
And if they did raise rates by 100 basis points, they did a Volcker, if they did that, what do you think would happen to the market?
It'd fall off a couple percent, and you know, and sharks feed when the meek retreat. So I would be all over that if we got a short-term dislocation.
I get the impression, reading between the lines of what you're saying, I get the impression that you might be just about ready to jump back in to big tech. Am I right?
Well, you are absolutely correct. I've been nibbling in the whole time, assembling positions, but if I get a big, massive drop based on something, I mean, it doesn't even really matter what it is at this point. If I get a big, massive drop, then yes, I am absolutely going after those shares because the growth rates that are on the table trump any kind of short-term market movement. The long-term perspective is very real, and most investors are doing themselves a disservice by running for the headline or to the sidelines right now.
All right, Keith, thanks very much indeed. Only time will tell how these earnings reports come out. Keith Fitz, everybody. Thank you very much indeed. All right, in advance of the opening of the market.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below, and of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.